Today we're going to talk about fair value gaps. I use fair value gaps a lot. In fact, my strategy is based around fair value gaps. Not just fair value gaps, but mainly fair value gaps. So, when you hear fair value gaps or a fair value gap, what comes to mind is actually a gap, but it's not like a visible gap you can see unless you read through the candles. It's not like the opening week gap or a gap that opens that shows up during the daily open or weekly open. This is a gap that happens in between the candles. So, and this kind of gap requires 3 consecutive candles. It doesn't need more, it doesn't need less. 3 candles. So, the actual meaning of fair value gap is a situation whereby the price delivery creates an imbalance in between these 3 candles, thereby leaving a gap in between these 3 candles. Now, what do I mean? Now, this first candle formed, the second candle formed, the third candle formed. Now, if you look at these 3 candles consecutively, you will see that there is a gap in between this low and this high. This gap in between, that's the fair value gap. From here to here. This gap from here to here, that's the fair value gap. When we're talking about the sell side, because these are bearish candles. So just the same thing goes to the buy side, opposite. So this sell side, ICT calls it CB. CB simply means this little abbreviation here. It means sell side imbalance, buy side inefficiency. Now, why is it imbalance and inefficiency? Now, the normal balance should be this candle trades down, this other candle trades down, this next candle doesn't leave any gap here. It goes, covers this gap and trades down. Now, if it happens like that, there is no imbalance. But since there's this gap here, that creates the imbalance with this candle, because it was all sellers. Buyers were not given opportunity on this candle. That's why it's called buy side inefficiency, sell side. No, that's why it's called sell side imbalance, buy side inefficiency, because buyers were inefficient, and you know what the meaning of efficiency. You know, when something has a quality or is reliable or is done proportional properly or adequately. I don't know what word to use. It's not an English class, but let's just get to the point. You know, there is an imbalance here. So that's the whole idea behind or around the fair value gap. Now the same thing goes to the buy side. The buy side is BC, buy side imbalance, sell side inefficiency. Now this candle contains the imbalance because there were no opportunities for sellers here. There were no opportunities for sellers here. So this candle formed, the second candle formed, the third candle could not trade to cover this gap here, thereby leaving this gap here. Leaving this gap here. So this, most of the time, this gap has to be filled or traded back to before price goes up, or if it breaks, it turns to, but that's not the topic for today. Just understanding the fair value gap. So that's it for the fair value gap. It requires only 3 candles, nothing more, nothing less. And there has to be a gap between the first and the third candle. The first and the third candle. Just do it opposite when you're looking for the sell side. Is the opposite when you're looking for buy side. So I actually took a trade on EURCHF, and I'm going to show you how I used a fair value gap, although my previous videos always contain fair value gaps, but let's focus on the fair value gap on this one. So let's go. Now, I think that's enough for the fair value gap. If there is anything you don't understand about the fair value gap, just drop your questions in the comment section and I'll try my best to, look at the comments and answer your questions. So that being said, let's get to the trade I took on EURCHF. So on EURCHF, let me delete these lines, too much lines. I don't like to delete my markups on my chart. I just leave them there just for future reference and when I'm reviewing trades and going back to data. So EURCHF, I think on my last lesson I talked about highs and lows, so it was also based around highs and lows here. This low, this down close candle and this up close candle. I saw this weekly low here. So I was expecting price to take out this low. I was expecting price to take out the low all the way down here. So what I did next was I went down to the daily time frame. I went down to the daily time frame. So when price came to that low, this is that weekly low, this blue line here. So when price came to that low, remember we are targeting the low somewhere around here. When price came to that low, what I did next was, okay, I looked up looking for fair value gaps. I didn't see any, but I saw this order block. I do use other blocks, but in this kind of setup, I don't think, personally, I don't use other blocks because they tend not to hold as much as fair value gaps. So that's why I ignore this other block. But when price after this day closed, the next day closed. Now, if you look, there is a gap between this. There's a gap between this bearish candle and this bullish candle. Remember what I talked about on this video earlier on. 3 consecutive candles, 1, 2, 3. Now it doesn't have to be bearish, bearish, bearish. It can be bearish, bearish, bullish. It can be bullish, bearish. Just you need the gap in between with 3 candles. So when I got this gap at the close of this day, now what I did next was I went down to the 4-hour. Now what am I looking for on the 4-hour? I'm looking to see if this fair value gap has liquidity in it. Liquidity, since I'm looking to sell, I'm looking for a high to be swept. So these 3 candles, I need to see a high formed in or at this fair value gap. It can be inside, it can be on top, but I just need this fair value gap to have a high. Now if it has 2 highs in it, let's say one here, and one inside the fair value gap, I'll take the one here. Although most times price will go and sweep all of them, but this is the one I'll take, the one on the high. So let's go to the 4-hour and see what happened on the 4-hour. Okay, first let's mark out this the close of this day. Opened here and closed here. So let's go to the 4-hour. Okay, this is the 4-hour. And remember what I said about highs in the fair value gap. Now it has to form on the 4-hour since I got my fair value gap on the daily. If it doesn't form on the 4-hour, I'm no longer looking at the fair value gap. I just turn my attention to something else or somewhere else. So when I saw this high formed on the 4-hour, now why I marked out this fair value gap here was because if I want to sell, if I'm selling, I don't want to see a fair value gap on the retracement leg, which is this leg. But now, when this high was forming, that means when the daily fair value gap was forming, this one formed on the 4-hour. So I marked it out, you know, just as a reminder, because price could get there and turn around. So I marked it out, then I waited for price to come and sweep this high. That's why I always put my X to symbolize that, okay, I want price to X this high. And you know what X means? Like, I need to go deep into that one. You know what X means? So to X, I need price to sweep this high, then give me a bullish candle. Then give me a bearish candle on the 4-hour. Since this is a 4-hour high, daily fair value gap, sweep the 4-hour high. I need the bearish candle on the 4-hour. So let's look at that retracement leg. The day closed here, this bullish candle, opened with this bearish candle. Now let's see from this candle to this bearish candle if there's a fair value gap. If there is none, that means the setup is valid. Okay, let's see. There's no one here. There's no one. Let's see. Delete this line. This candle and this candle. Okay, covered. 1, 2, 3. There's no gap. This one, there's no gap. And this one, there's no gap. So when I got the bearish candle on the 4-hour, on that daily fair value gap, after sweeping the 4-hour high, now let's mark it out. This is the bearish candle I got. The next thing I did was 1-hour time frame. I went down to the 1-hour. Then on the 1-hour, what was I looking for? Break of structure, displacement, fair value gaps or entry, and all of that. So when I came to the 1-hour, now this is what I saw: lower low, a higher low, sorry, higher high, higher low, higher high. Now this high was broken by a full body close of this candle, a full body close. 1, 2, 3, all closed above this high. So this high that closed above this high formed the low here. This low is a 1-hour low here. So after this low formed, now I'm waiting for a 1-hour displacement candle. I need the 1-hour candle to break below with force. So this candle came. This was around Asian session, I think. This was Asian session. So I was watching this candle. This candle broke below. This bearish candle here broke below. It was kind of energetic, although this rejection on that made me a little bit skeptical. But I decided to take it. So I saw this fair value gap here from this low of this candle to the high of this candle, and price has already tapped into it even before the displacement. So when I saw it, I was like, okay, now all I need is price to come back to that entry again, which is this fair value gap here. So I waited for price came back, tapped me in. I had my sell limits here, tapped me in here. Then the reason why I set, although this was not the full profit, the full profit was down here, this low, although we are targeting lower, but I decided to cut it off here. So why I took some profits here was because of that fair value gap I saw on the 4-hour when the daily fair value gap was forming. This fair value gap formed on the 4-hour. So I decided to take some profits here. You see how price came, didn't even regard the fair value gap, just smashed through and went straight down to take profit. So this is the trade I took on EURCHF and with the fair value gap explanation. this is it. So guys, I would really appreciate if you like the video and subscribe to the channel, so that the YouTube can refer this video to other traders, be beginners, advanced. You never stop learning. So I would really like if you appreciate the video by just liking and subscribing to the channel. Thank you. See you next time.